Sikshayati, platform for eminent authors, engaging teachers, successful students. To know more, email. Goodwill. Example, valuation of goodwill when the new partner contribute excess amount. X and Y are in partnership, X and Y, sharing profits and losses equally. Balance sheet of X and Y as on 31st December 2009 is liabilities capital is X for 50,000 and Y 40,000, so 90,000. Sundry creditors 10,000, so total liability side is 1 lakh. Assets, fixed assets is 50,000, stock is 40,000, bank balance is 10,000, so in the asset side the total amount is 1 lakh. On 1st January 2010, they agreed to take Z as 1/5 partner to increase the capital base to 1,20,000. Z agrees to pay rupees 45,000, so the necessary journal entries and partners capital account. Step 1. Allocation of remaining share to old partners. Remaining share is 4/5. That is because Z share is 1/5, so X and Y share is 4/5. So the remaining share will be allocated between X and Y. So X will get half into 4/5 is equal to 14. Y will get half into 4/5 is equal to 4 by 10. Z will get 1 by 5. So that comes to 2 by 10. So the step 2 we get new profit sharing ratio of X is to Y is to Z is 4 is to 4 is to 2 or 2 is to 2 is to 1. Step 3. So Z's share capital would be 1,20,000 into 1/5 because he gets 1/5 share. So that is equal to 24,000. Step 4. So the goodwill is 45,000 to by minus 24,000 because 45,000 he has brought when his capital is 24,000. So the 21,000 is the value of goodwill for his 1/5 share. So the total value of goodwill is 21,000 divided by 1/5, that is 21,000 into 5 is equal to 1,05,000. Step 5. So capital of partners is total base capital of the firm is 1,20,000. Capital of partners will be shared in the new profit sharing ratio. So X share would be 1,20,000 into 2 by 5 is equal to 48,000. Y share would be 1,20,000 into 2 by 5 is equal to 48,000. So X should withdraw the excess amount, that is 50,000 minus 40,000, that is 2,000 should be withdrawn by X, and Y should introduce the deficit balance, that is to make it 48,000. So we should introduce 48,000 minus 40,000 is equal to 8,000. Journal entries. Cash introduced by Z for 1/5 share, so the entry would be bank account 45,000 debit to Z's capital account 45,000, the amount brought by Z in the capital. Goodwill raised in old profit sharing ratio. So goodwill account is created. Goodwill account 1,05,000 to X capital 52,500 and Y's capital 52,500 in the old profit sharing ratio. Goodwill is written off to all the partners in the new profit sharing ratio. So 1,55,000 will go to X capital account is 42, Y is 42 and Z's 21. The calculation is shown earlier. Now the goodwill due to X and Y is, that is due to X due to Z is withdrawn by X and Y. So X gets 10,500 and Z gets 10,500. So the accounting entry would be X capital 10,000 500, Y's capital 10,500 to bank account, the amount withdrawn by X and Y. Excess capital withdrawn by X is 2000, so the entry would be X capital account debit to bank 2000. Deficit capital introduced by Y, so the bank account will be debited 8000 to Y's capital account 8000. Next, the partner's capital account as shown. In the credit side, the entry will be shown. In the ledger entry will look like balance brought forward for X, balance brought forward 50,000, for Y the balance brought forward 40,000 as per last balance sheet. By bank account 45,000 is credited to Z partner capital account, the amount brought in by him. Now by goodwill account, the amount will be credited to X 52,500 and 52,500 to Y in the old profit sharing ratio. By bank 8,000 introduced by Y. So these are the credit side of the respective capital accounts. In the debit side, to goodwill account would be debited in the new profit sharing ratio. So X 42,000, Y 42,000 and Z 21,000. Bank account, the amount taken by the Z share taken by X and Y, 10,500 and 10,500, and in the X would be debited by 2,000 withdrawn, excess amount withdrawn by him. So the balance would be carried 48,000 and 24,000, which are in proportion to their profit sharing ratio. Thank you for watching the video. Kindly write your comments. Click on the red subscribe button at the bottom of the video to get more details and free ebook. Email us.